Hello traders. Remember where we were yesterday on S&P? Dooby-dooby-doo. At decision point 2. I said you have to be extremely silly to short into this level. Only look to buy. And make sure when you buy, you don't buy anywhere near this level. What happened on S&P? Ultimate war zone, ultimate chop between the levels, all the way into European session when buyers picked up this theme. Guess what? This bullish rally overextended. We ain't touching it. This is where ultimate buy point was when we took advantage of the markets. And this is where we're expecting selling pressure. Make sense? So until we see powerful selling pressure, we ain't touching no S&P. We ain't trading no overextended rallies because we know how dangerous that is, demonstrated precisely yesterday. We unfortunately seeing exact same thing on oil. Remember what I kept telling you yesterday. Oil will become extremely unpredictable as magnificent short trade on monthly from 106 at reversal levels, and I will remind you that. As we've been watching very carefully, and I've been saying, if oil blasting 46, it's heading lower down, potentially all the way to 42. Currently bullish rally on oil also overextended. We ain't entering oil in reversal zone. We're monitoring for a pullback. And this is where it's going to get extremely interesting, as the power of the push to the downside will determine if this is spectacular bullish rally that blasting through these levels that will give us only bearish correction. Extremely important as we're watching oil trying, second day in a row, because reversal zone on monthly had been reached, and that is not to be ignored. All the levels, when I said actually yesterday and we looked in education course, spelled out by the price not since 2012 but since 2011. And here we go. That's where we are on oil, as this is the most powerful level, because only once every 5 to 8 years we see reversal levels reached on monthly charts. On that note, let's concentrate on S&P, and let's remember both markets are way overextended. On that note, we can take a look at few other time frames. This is where bullish rally on S&P continued. Just to remind you, bullish rally on S&P daily started from reversal levels well before FOMC release, night prior. And this is again, remember what we watched on hourly, decision point 2. Not surprising. Formula remains the same. The same decision point 2 you saw on S&P we've been buying from is where S&P had picked up the rally on daily. Formula remains the same. So let's see if markets will give us pullback finally. As we know extremely well, buying overextended markets is not a good idea. Patience and discipline and rule-based trading remains the key.